Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX rundown. The Fed cut rates, but it may not be the rate cut that the markets really wanted. Now, the members are not seeing another rate cut this year, October or December. However, markets are still pricing in a coin flip in October and really a coin flip through December. So there's one more cut expected here this year. Markets are expecting one more cut in 2020. So there's something's going to have to give here. Overall, the dollar index, the dollar is moving higher right now. That's because the cut was expected, but now that the members are not expecting one later this year, it's supportive to the dollar overall. It's a little bit of a relief rally here in the dollar. Not only that, the technicals have been supported. The dollar index never broke down below 97.5. The euro, which is really the major driver in the dollar index, never got out above that trend line we've been talking about all week long. So the rally in the euro through yesterday is contained. This could and should lead to some weakness here overnight and into tomorrow. But the Fed, what they're doing here is they moved up their GDP estimates just a tiny bit, a tenth of a percent. Same way they moved up their unemployment forecast, a tenth of a percent. Not a whole lot of adjustments there, but they don't look and see this picture domestically, at least, as gloomy as around the world. And that's one of the concerns that the Fed, and why they cut rates and why the expectations are still there, is even though we're seeing a little bit of a stronger CPI number here in the U.S., you're not seeing some of that stuff abroad, and inflation pressures abroad aren't really there. However, additionally, the PCE number, what the Fed watches most closely, is still well below that 2% target. So again, it can go both ways, and really what they're doing here, let's sum it up in one word: being patient. They're doing what the market expected. It may not be fully what the market wanted, but the stocks are trading higher right now. The volatility in treasuries is very tame. The volatility in currencies is very tame, and that's a good thing right now. So ultimately, it's all in all, it turned out to be a good move here from the Fed, and they're not the only ones. Now you look at the Bank of Japan on deck tonight. You got the Swiss Bank on tomorrow. You as well have the Bank of England on tomorrow. So there's a lot of news still coming out. There's not a whole lot of expectations, but there's going to be a lot more news what these central bankers have to say. Philly Fed manufacturing tomorrow at 7:30 a.m. Central Time is going to be crucial. And so now looking at the Bank of Japan, the yen technically is breaking below that 93 mark in the December contract. That is signaling additional weakness and additional waves of selling. So we're breaking down below a trend line. That was the 92.5 trend line in the September contract we were talking about. Now it came in at 93. So keep an eye on that. And then the Aussie dollar, as we talked about, it's stalled against resistance. Stalled up there at 68.90. You're starting to see some of that selling pick up. It's down today. And ultimately, this is something where it's a dead cat bounce looking like it's starting to fail. Remember Sunday night, the Chinese data was very poor. Industrial production, the worst since March 2002. Fixed asset investment at all-time lows. So you're seeing this Aussie dollar start to roll back over. There is room here for this to go. Now the Canadian dollar, it looks like it's another story. We are bulled up in the Canadian dollar. We do have an option position on. It's a skew-based option position that we have put on through our Trade Alerts program. So if you have any questions about it, feel free to reach out to us. But there's a lot of support in the Canadian dollar at 75, so keep an eye on that. And as this thing consolidates, crude oil volatility is also going to have an effect on the Canadian dollar. Oh, and lastly, I did forget, you do have employment data out of Australia tonight too. So give us a call though. We're here to help with anything as you navigate the Fed, navigate the other central banks, navigate into the end of the week. We are here. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks.